Well, welcome to our viewers here today. So Indorama Ventures earlier today announced a record first quarter result. Today we're joined by our CEO, Mr. DK Agarwal. Very warm welcome to you, sir.
Thank you, sir.
So as I said, we had a record quarter, and of course that's a very positive start following on from the record full year result we had last year. What were the key drivers?
Well, you're right, Stuart. This has been the record quarter for us. Core EBITDA of $650 million, reported EBITDA of $784 million, net profit reported of 14 billion baht, core profit of 10. I'm very happy about the results what has come in. Gives me a reported EPS of about 2.48. What has been the key drivers of this success in the first quarter has been first is resiliency of our product group. No doubt about it. Last 2 years of pandemic, we have seen tremendous growth in our businesses, except for some businesses which were like mobility, which got impacted due to the semiconductor shortage. The three big drivers, I would say, one is the supply chain disruption, which has happened across the world for the last 2 years. I was listening, 14% of the shipping capacity is lost because of port congestion. The freights have skyrocketed. So having a geographical diversification, we can price the product based on import parity. And we did reset our contracts for 22 in 21. If you remember, I said that we could not reset in 21. And that certainly got reflected in the first quarter 22 earning. The second driver has been the crude oil prices. Crude oil prices have reached above $100 a barrel. This benefits our business, particularly in integrated oxides and derivatives, where we get the shale gas advantage. You know, we produce ethylene from ethane, natural gas, and that has benefited us. MTBE is at a record profit. Although the energy margins has not been so good, and the downstream demand has been fantastic in surfactants, ethanolamines, propylene oxide and propylene glycol. The third driver, economies are opening up. People have been in cages for 2 years, and I think they've learned that we have to live with the COVID, and the ongoing demand which was not there so far is coming back, and with this all economies coming back, the demand is even stronger. And second quarter, when we go into a season, the demand will be even more stronger. So very exciting time for us, for India.
But even as we head out, hopefully towards the end of COVID, so this year one would hope, I mean, the world is still a very uncertain place. You know, we have still heightened crude oil or energy prices across the board, especially in Europe. We've got an emerging situation in Ukraine, and we have an environment of higher interest rates, at least in some very important Western markets. You know, how do you think we'll fare against these headwinds as we go forward into 2022?
Very important question. Geopolitical situation between Russia and Ukraine. First, let's talk about what is our exposure in Russia. I only have 1% of revenue and probably 1.1% of EBITDA. So we are watching the situation carefully. That is still operating there. Energy prices, as you rightly said, in Europe has spiked a lot. We had a significant impact even last year in the fourth quarter. This year we had incremental impact of about in excess of $30 million in the first quarter. And because there is a shortage of product, and this cost is for everybody, we are able to pass it as a surcharges, and we are able to recover in the margins, and that covers in the first quarter. Well, there is still a lot of uncertainty in the market, whether there will be further increase in the energy prices. That's a question to be seen. We are watching the situation carefully, but we feel that our products are daily lives product, and we are able to pass on these prices and additional cost. But we are very careful about the demand, and we are seeing the demand is still maintaining. We are going to see any destruction in the demand coming in. Inflation, absolutely kicking in. Fed has just raised 50 basis points and is going to raise further interest rate. We took a proactive action in fixing our debt. Nearly 62% of our debt on gross debt basis is on a fixed interest rate. So at 1% interest rate moves my needle of interest cost by $7.5 million. It doesn't make much difference. Yes, there is a shortage of workers in the United States. We're keeping a very close watch on it. But as near term we look at it, that second quarter looks very exciting and the remaining part of the year.
There does seem to be a genuine optimism in many of our markets around the COVID situation as well. But there is one exception with China, of course, which almost seems to be stepping back and tightening up restrictions, lockdowns, etc. Do you see this impacting your business at all?
China is a very large country, so absolutely the zero COVID policy is having impact on the global supply chain. Now, global supply chain is impacting the business, that local demand is getting impacted. But since we are geographically diversified, we stand to gain on the other part of the business. Having said that, there are negative impacts also because of the Chinese domestic demand. Fortunately, our PET plant is in Guangzhou area. This was more in Shanghai area or the Beijing area. Our operations are not impacted, but overall polyester operating rate has come down, which has impacted MEG demand. And MEG margins has been the worst so far in the first quarter over NAFTA. Our survival has been basically because of the shale gas economics. We make based on ethane. That is there. But yes, it's a concern. RMB is getting weaker. Of course, that benefits in terms of our cost structure. But whether how much slowdown in China happens, but I hope this situation will come out of COVID as the rest of the world has come out.
Well, let's delve a bit deeper into our own business, and let's start with the integrated oxides and derivatives segment, or IOD, as we call it. It's been something of a banner quarter for them, hasn't it? Because we've had the completion of a major Oxiteno acquisition, which of course through Latin American market, Brazil in particular, and we've had the Lake Charles cracker come back online. How do you see that contributing to earnings for IVL as a whole?
Absolutely. So second quarter, certainly we started the Lake Charles cracker. It has been a significant delay. It is now running normal. It will start contributing from second quarter. Although it contributed some in first quarter. Oxiteno has been a great acquisition for us. This reinforces our position in surfactant world. We become largest in Americas. A very talented people working there. A lot of innovation pipeline. Their latest quarterly results have also made north of $60 million EBITDA. So second quarter itself, we don't see any reason that they will go behind it. Oleochemical is doing pretty good. The surfactant demand is stronger, except the MEG, which is Agarwal, as I said. So this acquisition very timely and fantastic acquisition, which we are integrating at present. We are unlocking the synergy of first 100 days. That how do we create value out of cross-selling and reducing the SG&As and the other actions which we may take on the integration.
So what's the outlook for the remaining two segments, which of course is combined PET, which is a big segment still, and then fibers segment?
Yeah, so combined PET still demand is very strong, and you saw that was the star performer for the first quarter. I don't, as I'm speaking you in the nearly middle of May, I have a good visibility of second quarter. Demand remains strong. On-go demand in Europe is going to be greater. So I see stronger spreads maintaining. Yes, the energy impact will be there in Europe, and it's also kicking up in North America. So, but we hope to recover that into our spreads and the margins. Fiber is a little bit challenging business right now. Particularly in Europe, if you see because of high energy costs, we've been able to pass on in the tag hot business or airbag business, but because of the semiconductor shortage, the OEM demand is poorer. So mobility does have a little bit of headwind, but margins have been improved. Lifestyle had a very good first quarter because of the stronger margins and demand in the Asian world. But again, as China is slowing down, and we are mostly in the export of lifestyle fiber as well as domestic business. So we have a negative impact of the freight coming up. And hygiene has reached us to a new norm. One propylene prices remain strong. We had a lag loss in the first quarter. We are hoping to recover a significant portion in the second quarter. Looks like we may not be able to recover. So I would say fiber is a more in the same as like first quarter, but Olympus program, which is deep rooted in the organization, that is I'm happy about it. And is running at a run rate of $440 million of value unlocking, and that cuts across all three verticals and predominantly in fiber. So interesting time.
So just to cap the interview, another major event that happened in the first quarter was the announcement of our new ambition, Vision 2030. So that was, a couple of months ago. What can you tell us about that and any progress made towards it?
Yeah, so it's a, 2030 vision is very, very clear. We started with our commitment with the Ellen MacArthur Foundation that by 2025 we'll have 750,000 tons of recycling. And we are already there at 550. Probably we will achieve this target by middle of 23 or by end of 23. And then we have weight that will be 2.2 million tons and biofeedstock. This is the beginning of the journey. There's a lot of work to be done. We have made a focus group to work on it. We can identify different technologies, make investments, and go from there. So there is a commitment by the board. There's an entire organization is behind it, and I think it's a first mover advantage. What we saw in recycling, that how can we be the first mover advantage? Whether it's biodegradable products, whether it is bio-based feedstock, circular economy, climate will be very important, and the circularity will be very important, and how do we decarbonize it? So we are on that journey of 2030 vision.
Well, Mr. Agarwal, it certainly sounds like it's been a good first quarter, and it also sounds like it's likely to be a good year following our record results last year as well. I'd like to thank you for coming on the show.
Thank you very much. Thank you very much.